Hello, my name is Steve Bigelow with the Candlestick Forum. The markets had a change of investor sentiment today. There was a bearish engulfing signal, predominantly due to probably the bombing in Afghanistan. But here's a very simple analysis. If you're in an uptrend and they pull it back and then continue the uptrend, if they do another sell signal prior to getting back up to the previous high, that means the bears have taken control. At best, you might see sideways, but you might be more inclined to see the market starting to pull back. This was also illustrated in what we call the advanced block pattern in the NASDAQ, which was a big up day, a smaller up day, and a very small up day. That told you pretty much just logic from the Japanese rice traders' perspective, that the bullish investor sentiment is starting to run out of steam. And that kind of helped with the sell-off today. So you can also see that that occurred, this evening star signal occurred right here at this level that everybody could be watching as a resistance level. The biotechs, though, kept their strength. We recommended BYSI yesterday, and notice what it did today. This is very simple logic put into graphics, that if they were gapping up, knowing that this was a resistance level, gapping up to get to that resistance level, the odds are that they don't care about this resistance level anymore. They're still going higher. So the biotechs, if you see one heading up, maybe that's an aberration of that sector. But if you can see there was a bunch of them, we recommended all right, sorry about that. An apology call from your utility company. But you can see that there was a few biotechs acting strong. Now, our recommendation on ARCT was based upon this fry pan bottom, and notice the T-line crunch that was pushing the price back up through the resistance level of the 200. So anytime you can see that there's a bunch of stocks in a sector being bought, that's a pretty good added confidence that that sector is being bought across the board, not just specific stocks. So our patterns are still working, even though the market got soggy. We recommended DVAX based upon the inverted hammer J-hook pattern. You can see it did well today, but now we're at wave one, and wave three, approximately the same as wave one. You get a little bit more attentive as far as getting ready to put a stop loss in at a level that it shouldn't trade. And if we know the market is starting to turn over, we want to find the best bearish signals. And one of your strongest bearish signals is a bearish kicker signal. So if the market is getting weaker, this is very good evidence that with the market getting weaker and strong sell signals, those are the best places to start adding short positions. So we also wanted to announce that September 11th, this Saturday, we're going to be doing the Candlestick Mini Spotlight training. They usually last a couple hours, but showing where you start taking profits, even though you might not have a confirmed sell signal closing below the T-line. And that's just adding up the visuals, both in the analysis of the market as well as individual stocks, to say, well, the probabilities are starting to go against us here. So right now, the probabilities look like things could be heading lower. They're a bearish left-right combo, close below the T-line. At best, maybe a wedge type formation, but it tells us we've got higher probabilities that the investor sentiment has not continued further to the upside. They're starting to sell off. That'll be it. We'll see you in the chat rooms.